Hello guys, how are you? Welcome to another class of the Matrix Lab. Today, this is actually the first class in English that I'm gonna do. That is gonna be right here in the YouTube channel. So first of all, I want to thank everybody that's here today, and also I would like to ask you to please do me a favor and like the channel, share the channel, and then be able to share this opportunity that we have right here trading with the Matrix Lab. So today I'm gonna do a very basic class. What I'm gonna explain about is something called key levels, and is what I will call the core of my trading career. Okay, so before I knew key levels, I was messed up. I was going everywhere when I would go to a chart. Like nothing will make sense for me, or everything will make sense, which is worst. With key levels, everything got fixed. Key levels gave me a direction in the market that I needed in order for me to be profitable. And whenever somebody asks me, hey, can you teach me trading? The very first thing that's gonna come out of my mouth is you need to learn key levels, because key levels is the core of everything. Okay, so today we're gonna talk about that. I'm gonna go to different pairs and I'm gonna show you where the key levels that I trade on those pairs are, and then we'll go from there. Okay, do me a favor, guys, please like and follow the channel so everybody else could be able to see what we're teaching right here in the Matrix Lab. So let's go. So first of all, I'm going to show you guys US 30, which is one of the indices that I trade, pretty much like my main indices. And there's a couple levels here that for me they have to be marked up always in the chart. Like some people call key levels psychological levels, and it might be the same, whatever. I call them key levels because that's how I learned them. And believe it or not, that there's a lot of stuff that I use that I've learned from other people. Key levels, I just happen to be looking at the charts once and I say, hey, hold on, this makes sense. And I put it in there, but then I found out that some people do call these psychological levels. So it might be kind of like the same information if you know what psychological levels are. Okay, so let's talk about the key levels that I use for US study. So pretty much I place a horizontal line in every 1,000 points. Okay, so again, we're gonna go to 45,000, 44,000, 43, 42, 41, 40, 39, 38, 37, 36, 35, etc. And I'm gonna show you, like, I took these lines out for now for a reason, just for me to be able to show you what key levels could do in your trading. Okay, I'll show you right now. So let's just say that I want to take a trade from 42, okay, from 42 to 40 to 41, or from 41 to 42. Okay, because I know for a fact that in 41, I'm gonna have a key level. I'm gonna show you right now what that key level looks like. Okay, so let me take that out for a minute. Okay, I'm gonna clone this very quick right here. It's gonna be easier. And I'm gonna place that line. I'm gonna place it right at 41. Right at 41. I'm gonna place that line. Look. You see this right here? This is what I call a key level, because every single time that it touches 41, it's gonna bounce either up, or if you're going up, it's gonna bounce down like it did right here. So it's like having on your chart support and resistance levels, but they're always there. So you don't have to fish for it. You don't have to look for it. They're pretty much all the time in your chart, and you could see where the market is going to react before it gets there. So I'm gonna show you right here. If you go back here, you see it too. So see what the market is doing right here, right? So the market goes all the way up from this level right here, which is 39,500. You're gonna see it right there. This is around 39,500 right there. So you see how the level goes up and it stops exactly at 41. Then it goes back down all the way to 38,500, which is another key level. Same thing right here. the trade goes up and then it stops. It consolidates around that area until it goes all the way back, and then it breaks right here again at 43. Then it does the same thing all the way back to 42. Then it goes back up, passes again 43, but this time passes it for real, and it stays around 44 again, and it goes down again to 43. You see how it goes from how you could trade this from key level to key level. It's a very simple strategy. It makes a lot of sense, and it's something that you don't have to be fishing for it. Okay, it's like I said, it's like having all the time in your chart support and resistance levels without having to go and paint them and take them out on your chart all the time. You just leave those horizontal lines in it, and you're gonna be able to see a lot of stuff. Now, in between these key levels, I also have other key levels that are very important, okay? And those are every 250. So let's just say I want to trade the zone from 42 to 43, okay? Or we could do 44. So let's just do 40. Something that looks more. We could do it right here. This one will work. So let's just say we do from 41, okay? And I'm gonna put horizontal lines every 250. You're gonna see how it all makes sense. So here we're gonna have 4750. That's a key level. You see how it's on the same zone as 41, but it's kind of like more exact where it actually bounced back. So that's 4750, which is a key level, okay? The next key level after that will be 4500. You're gonna see it right there. $4,500. You're gonna see it right there. This is in the 4 hour, guys, okay? So this is the 4 hours chart. And then the next one, we're gonna put it at 4250, which is pretty much where the market is right now. It's around that key level. So see how simple you could see how it goes. Okay, it has stopped at 4750, which is a key level. This candle dropped from 4750. It dropped below. It dropped below 4500. Okay, it closed below 4500, and then the next candle it opened up exactly at 4500, and then it bounced back down. Now you see how this next candle that's coming up right here, this 4 hour, is below 4250. So that is telling you that the market is moving from key level to key level. So that's a very easy trade that you could do there. You could even trade from 40. Let's say you only want 250 points in your study. Right there, that's one candle in 4 hours. You don't have to go and do a lot of scalping with this strategy if you follow the key levels, right? Now, before I used to do a lot of scalping. Now I'm more of an intraday trader, and my trades could last 8 hours, 12 hours. Sometimes I do even more than that. Now, if you go to like lower time frames and you see the key levels every 250, they're gonna make a lot more sense for you to take those trades, okay? As you can see right here. Now, my kind of a strategy that I manage right now, honestly, I don't need a key level every 250 points. I'm good with every 1,000 points, because when I do my trades, my take profits are most of the time 500 to 1,000 points each. So it makes more sense for me to wait until the biggest key levels that I know, which are always the key levels for me: 41, 40, 39, 38, etc. Now, this works most of the time, okay? There is no strategy that I'm going to teach you or that you're going to learn that is going to work all the time. It doesn't work that way. Okay. However, you could use key levels and have that confluence with something else. You could use a trend line. You could use Fibonacci. I don't like trend lines a lot, but you could use Fibonacci. Fibonacci makes a lot of sense. So if you have a Fibonacci, let's say at a 38% or 50% with a key level, it's a good trade. If you have a Fibonacci key level and an RSI showing you, let's just say, a shark fin, it makes even more sense for you to trade that trade, because now you have three different scenarios that are telling you where that trade is going. Now, don't ever use any strategy that I teach you or somebody else teach you without confluence, because when you do that, that's not a high value trade right there. Okay, so now I just show you what key levels make sense for me when it comes to US study and how do I use them. I'm gonna show you the key levels that I use for gold. Okay, now I encourage you to go ahead, get on the charts, find out whatever asset you're trading, right? Find out which key levels you need to use in order to trade in your in the asset that you're trading, because every asset will be different. You're really not gonna have the same key levels for every asset. They're gonna be completely different, right? So you're gonna have different numbers for gold that you're gonna have for US study, or you're gonna have for NAS, or that you're going to have for silver. They're gonna be completely different. So I'm gonna show you what I use for gold right now, which is something that I trade a lot. Here, give me just a minute. Coming up. Oh boy. Here you go. So for gold, the key levels that I use are, like you see, 3250, 3200, 3150, 3100, 3050. Now, this is like that's about 500 points different. Okay. Why do I trade them like that? Well, just look at the chart, guys. Just look at the chart, and then you could do your own homework once you get into the charts. Just look at these candles. You see how they stop always at key levels, go back to the next key level, bounce back to the key level that they just stopped, and then go back again. And they kept on doing the same, right? So it's a very simple strategy to trade. And if you combine it with other kind of strategy that could give you better entries, you're set. Key levels for me are like the core of my trading, okay? And I teach people key levels all the time because I believe in them and I know exactly how powerful they are. So key levels for gold, I just show them to you. I'm also gonna show you right now the key levels that I use for NAS, okay? Like you see right here in this case is 1900, 1850 right here. Like, let me put it this way, guys. All right, that was the hour, right? But if you were to scalp this, that's the 3 hour. That's a 4 hour. So you see, like, right now where the market is right now in NAS is right at a key level, okay? Now, I'm not just gonna take a trade because it's at a key level. I need to see something else, right? It's on the 4 hour. So if it's on the 4 hour and you have something like this that looks exactly like a sell, like an incoming sell that's gonna happen, I'm not gonna take a buy just because it's on a key level. It wouldn't make any sense, right? However, if you see the up right here, you see how you have first low high. You see right here. So you have this high is lower than this high, and this high is lower than this high, right? So if I were to take this trade, this would have made perfect sense for me because you see how it bounced again on the key level at 1900. It bounced right here, 1, 2, 3, 4 times in 4 hour candles. So that's a lot of data that is telling you that the market is rejecting that zone, right? So that would have been a good trade for me to take as a sell. I didn't take it, but I knew it would have been a good sell if I would have been watching the market. Why? Because you see it right here. You see how this became a resistance zone, right? However, let's just say that the market is what it is right now. If you look at the hour, well, it looks like it could start bouncing up just because you have this candle doing something, but honestly that candle is not close. So it's a candle that is an hour, it's to have 44 minutes left. Even if it went up as soon as it opened up, it doesn't mean that the candle is going to close up or it's going to close at the next key level. I doubt it. It might stay there for a little bit and then go back down. So it's very, 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 very important for you guys that whenever you guys do any kind of trading, you guys make sure every single time you have more confluence than just one simple strategy. I'm showing you one right now, which is key levels, but you don't want to use key levels just by itself. You want to use key levels with something else that will make sense, okay? So I just show you what I use for NAS, which is 1900, 1850, 1800, 17500, 17,000, etc., etc., etc. Every 500 points pretty much, okay? And you're gonna see it in the chart. Go ahead, guys, do your homework, get on TradingView, put key levels in your chart, and you trust me, you're gonna see the difference once you see the charts with key levels, okay? Now what I use for let me see, I just show you NAS, I just show you gold, I show you steady. Let me show you GBP APY. Let me get to it, which is another one that I use a lot. Here you go. So for GBP APY, I use GBP APY a lot for you know, for longer trades, right? So for longer trades, these are the key levels that I use in GBP APY, which you're gonna see them right there. So you see 200, 195, 190, 187, sorry, 180, 175, etc. Now, in between those, you're gonna have other stuff, like you're gonna see right here, and I'm gonna show it to you, just like I did in US Steady. You could grab, right? You could grab a horizontal line, and you could put it on you could put it at 192.50 if I'm not mistaken. There you go, right there. You see how now you have other entries that you could use? You see how you have bounce as soon as it touches that zone? Now, some people might say, well, it's a 50%. Yeah, but you wouldn't know that unless you do a support and resistance level right there, right? So you're gonna grab this thing and then you're gonna come try to find a resistance level right there. Well, I'm telling you, that's a zone. The resistance level is actually the key level, which is 192.500. If you have had that resistance level on your chart all the time, you will have been able to see that trade before it even happened. And that's what I'm trying to teach you guys. If you keep key levels all the time on your chart, you're gonna see the difference every time you trade, okay? Now the same thing right here, 187.500, which is, well, this is the weekly with the weekly open, but I know there's a key level right there, and I'm gonna show it to you, which is 187.50. Boom, right there. You see how it's kind of on the same place that the weekly opens. That's very important, okay? So guys, that's everything for the class today. I want you guys to go ahead and be able to take this information, put it into action, okay? So go ahead, get on the charts, okay? Get on TradingView, start doing your short time, right? You need to do a lot of shorting time. If you want to be successful in this business, if you want to be a successful trader, you have to do short time. If you don't do any short time, you're gonna suck at this. It is what it is, right? I can't tell you, any other way. Go ahead, get on the chart, choose a pair that you like. It could be USD, it could be Euro USD, it could be gold, it could be silver, it could be NAS, it could be whatever you want to trade, okay? But whatever you trade, go ahead and find on the chart where those key levels present itself. And trust me, every pair has key levels, and you could take advantage of those when you're trading, okay? All right, guys, just do me a favor, like the channel, share the channel, You could go ahead. We also have a channel in Telegram that we use, and we give out information. It's free for you guys to join. You could join the Telegram chat that we use, and also you could join the broker that we use for trading, which is a very good broker. It has very good spreads, and it pays, which is what matters, right? You want to get paid in this business, that broker is going to pay you. So just do me a favor, guys, like, share, and follow. Thank you, guys, and I'll see you in the next class.